Hey guys, happy Thursday, happy Halloween. Let's see. Per the usual, I'm just gonna peek and make sure this is actually working. Um, because every time I've checked, guys, we've been good. When I haven't checked, we've had problems. So for those of you that joined me live, bear with me for 30 seconds. For those of you watching replay, bear with me for 30 seconds. Let's see. Um, do-do-do. Hey, I see some of you guys joining in different locations. Feel free to let me know where you're joining from. Love to hear where you guys are watching when you guys join us. So, excuse me. So jump in. Again, let me know where you're from. As always, I want to start by thanking you guys. Okay, I know that time is our most precious commodity. It's yours, it's mine. So I don't take, whether you're watching this, joining us live or watching it in replay, I do not take you devoting your time or spending some of your time with me. I don't take it for granted, so I appreciate you being here. For those of you that may not know me, I am Bree Beers. I am Bree Beers Associates. We are a Denver-based accounting firm, but we work with clients across the country. I am a CPA, a certified tax coach, an advanced tax strategist, a fractional CFO. I have a bunch of titles that I took courses for and passed tests for, but where I really like to say I hang my hat is on my 20 plus years of accounting experience. We finished up I finished up my 12th tax season, and I have been a business owner. I've owned Bree Beers and Associates for 7 years. And so I like that I'm not just a tax preparer or a tax advisor, I'm also an entrepreneur. So when I'm advising you guys as business owners, it's from a tax point of view, but it's also from a been there, done that point of view. I'm in your shoes, I'm walking the same path you are. So I understand that struggle. And so I took over my firm almost 7.5 years ago, and spent at least the last 6.5 years learning the tax code inside and out, and really figuring out how to apply it to more than just tax preparation, right? So we talk about your tax return as the compliance, right? You have to do it. It's just this compliance after the fact piece. But the tax planning, the tax strategy, all those pieces within our tax code that we think are reserved for the rich and the wealthy, the reason the rich and the wealthy benefit from them is because they have the time and resources and people to do so. All right. There's actually nothing in the tax code that says only they can utilize these tax laws and tax rules and tax loopholes. All right. It is made for all of us. So my mission is really to help the working class use tax planning, utilize these loopholes, these rules that are set in our IRS guidelines to cut your tax bill. I want you to cut your tax bill, find more money, you find savings, put that money in your pocket, and use those dollars to start building your own wealth. All right. It's kind of a way to give yourself a raise without working more, right? So you're making the same amount of money, you're just paying less to the government. So you get to keep that and, spend it in your business, in your retirement, in your kids, whatever that looks like, in terms of building your own wealth. So I am a firm believer, strong advocate for tax planning being a step to building your own wealth. All right. So today we're talking about the Augusta Rule. So this is sometimes called the Master's Rule. It's really a self-rental rule. So what it is, it allows you, there's two pieces we're going to talk about today. Okay, we're going to talk about the general Augusta Rule that applies to everyone. And then we're going to talk about how as a business owner, you can kind of double take advantage of this. All right. So the Augusta Rule in itself, okay, it's called the Augusta Rule or the Masters Rule because it came about from the golf tournament, the Masters, which is held in Augusta. And what was happening down there is people who lived in that area would go on vacation or go out of town, and they would rent their houses in Augusta for the duration of the tournament. And they would make tons of money off of it. All right. And so the Augusta Rule from the IRS standpoint says that you are allowed to rent out your home to anyone for up to 14 days and receive that income tax-free. All right. I'm going to say that again, because there's not very many ways that we can get money. We can earn money, whether actively or passively, and not have it be taxed. All right. So the Augusta Rule allows you to rent your home that you own for up to 14 days and receive that rental income tax-free. All right. So this, you do have to rent your home. We'll talk about the if you guys have been here before, we talk about qualification, um, documentation and reporting. So we'll talk about qualifying. You do have to own your home. But how this works, okay, so just from that point of view, you can rent it to anyone, wherever, okay, for up to 14 days. You get paid, that money is tax-free, all right? So how can we use the Augusta Rule as a business owner to lower our tax bill? Well, what we can do is those 14 days a year that we're allowed to rent our house out, we can rent it to our business. All right. So we can rent it to our business for some sort of work related events. All right. Things that we see our clients rent their houses out for: leadership retreats, quarterly planning events. The thing I get that pushback on is it's only me, right? Like, it's only me. I have no employees. I have no partners, no other shareholders. Your choice. You can still utilize this, you guys, if you have the proper documentation in place. All right. This loophole is all about the documentation. Okay. So you can rent your house up to 14 days per year. Your business can rent your home from you personally for up to 14 days a year for a business event. Okay. Your business pays you. So let's say me, right? Bree Beers and Associates pays Brianna Beers a rental fee for the days it uses it based on fair market value. Right. And fair market value, we look at Airbnb comps, we look at VRBO. We also use what's called peerspace.com. That's where you can go to just rent out like meeting and conference spaces. All right. So we do calculations when we work with our clients. We do all of this, right? We do all the investigation, we do all the research. We come up with a daily rate that is fair, that will uphold an audit with that documentation. All right. So the business then pays rent, right? It rents out your house just like it would rent out a conference room, it would rent out an Airbnb, it would rent out, a hotel lot space, your call. And then the rental fee is a deduction to the business, just like it would be if you rented from anyone else. Okay. So the business gets to deduct that rent as a business income. But then because of the Augusta Rule, I get, as the house owner, as the homeowner, get to receive that money tax-free. All right. So quick example. So let's say, typically many of our clients will do they'll do quarterly retreats, at 3 to 4 days a piece. All right. To get to that 14 days, you can choose how you get to that 14 days. We find the rates, and we find out that if we were to, we look at Airbnbs, we look at VRBO, we also, in our area, we also look at Peerspace. If we have hotel conference room comps in the area, we'll look at those as well. And let's say we find out, oh man, it would cost us $500 a day, to have this 4-day retreat or, whatever. So $500, right? So $500 times 400 and 500, you guys, is really, you shouldn't be much less than that when you look at all of the comps, when you take in, if you do the work or you have someone do the work, and you should be 500 should be a minimum, really, when it comes down to all the fees involved, or if you're going to Peerspace and you're booking it for a full 8-hour day, $500 is not a crazy starting point. But let's use it for the sake of being low. We do it for the full 14 days a year. That's $7,000. That's $7,000 a year that your business is paying to you personally for rent. Okay. And that becomes a business deduction. All right. And the benefit of it comes to whatever your tax bracket is. Okay. So if you're in the 24% tax bracket, that's one of the most common. Oops. So we have $7,000 and it times let's say 2.2. That's the most common. We're going to save $1,500 on our tax return. Okay. Implementing this Augusta Rule at minimum, if you're in the 22% tax bracket, should save you $1,500 in taxes a year. All right. And the thing about this one is there is a lot of work on the front end to setting it up, getting everything in place so that you can, you have that documentation piece. But once it's in place, it's a matter of just doing it. Okay. So we're going to talk about that. All right. And what's cool, so we always talk, what we like to talk about here, if you've visited me before, when we talk about tax strategies, okay, we always try to, how is it beneficial, right? So there's many tax strategies we implement where it's just moving post-tax dollars to pre-tax dollars. All right. This one is just, it's a strategy that is money, right? That you may or may not you may or may not choose to have a leadership retreat if this Augusta Rule didn't apply. I get that. Let's assume you're going to, right? So if you're going to have a retreat, basically what it is, it's the business paying you personally that money instead of having to pay someone else and paying it to you personally in a tax-free way. All right. And so you actually aren't spending that money, right? It still remains in your pocket. Right? Your business is paying you, so it's still yours. Okay, so let's talk about qualification. You have to own your own home. Okay? You cannot rent and take advantage of the Augusta Rule. And it has to be your primary or your secondary residence. Typically, that's because if you have a vacation home, right, it can get, I've seen taxpayers use like an Airbnb or a VRBO that like one they own for this purpose. Just takes a little more documentation to prove, to separate that 14-day income from the rest. But I've seen it upheld with proper documentation. But really, your primary residence, your secondary residence, really easy to get. And that's it. That's the qualification. Okay. And I guess the third one would be you have to use it for business purposes. All right. So those are the three qualifications. Your documentation. Most of the work comes from the setup information piece. All right. So, and this is something that if you work with us and we do if you work with us on just a one-time tax plan, which is what we're doing now with clients, we will set this up. We will do the reasonable daily fee calculations. We'll figure out what that daily rate is. Okay, for you, that's the setup, right? Really figure out what is that daily rate that I should be charging. All right, putting a contract, the contract comes into ongoing. So the setup is finding that reasonable calculation. This is something you should do at the very least every year. If not, every time you're renting it out. All right. Some of you may decide to just rent your house to your business for one 14-day stretch. That's tough to argue in IRS court, I'd say. 4 quarterly 3 or 4 day retreats, or one of my clients, they do monthly 1-days. Okay, so once a month they do a 1-day retreat. Okay, so that's 12 of their days. And then at year end, they do a 3-day. That to me is the easiest way to document it and make it legit. All right. So a monthly planning retreat for however many hours. And then at the end of the year or mid-year, but once a year, you have that 3-day in there. Okay. You do you. But the setup is you have to have that reasonable daily fee calculation. Again, you can do that once a year. You could do that each time you rent it out. If you're doing it monthly, I wouldn't do it every month. That's ridiculous. And then ongoing, you have to invoice. All right. The business has to receive an invoice from you personally and pay it. All right. And what we do as well is we put rental contracts or agreements into place. They're pretty easy boilerplate templates, but it's something that we also do for our clients just for that documentation support, should you ever get examined or audited. All right. So, and then the reporting piece at year end. Okay. The business is going to prepare a 1099 saying we paid you this much. Okay. To you personally. Okay. Just kind of like when you're a contractor and you get a 1099 from your vendors who you paid, all this money to throughout the year. Similar things. They're going to issue a 1099 saying you paid me $7,000 this year, or we paid you $7,000 this year. Your business, there's not really reporting. They're receiving the invoice, paying the check. It's going on the P&L. Okay, which then goes on to your Schedule C, or your 1065, your 1120S, your 1120, whatever business entity type you are. All right. And then you personally are going to report that 1099 on your Schedule E and then mark it as exempt under the Augusta Rule. Okay. You or your tax preparer will do that. All right. So sounds super simple, right? It is. It really comes down to just having the proper documentation, all right, so that if you ever do get audited, you just hand the exam like, hey, here it is. All right. But it's one of those ones that people tend to be scared to work with because it seems scary. It seems big. It seems, for some people, it seems illegal, but it's in our tax code. Okay. The Augusta Rule is an IRS sanctioned loophole. All right. So that's it. Augusta Rule, super simple. Okay. If you are interested in, we still have a couple slots left over, and more than just the slots. Where we're at is like running out of time. It's almost November, but we are for probably 2 more weeks, I'd say, able to do tax planning for you. So if you're interested in seeing the Augusta Rule, hiring your kids, checking on your business entity type, setting up accountable plans, we call them tier 1 tax strategies. All right. If you're interested in us doing a free analysis of your tax picture for 2024 and seeing if you can implement any of these and save money on your 2024 taxes, schedule a discovery call with us. The discovery call, it's 15 minutes. It's super quick. It's really us just seeing if we're able to help you. If we are, we'll proceed. We'll do a free tax analysis for you, and then we'll meet again. And at that point, we show you what you're able to save, how you're able to utilize the tax strategies. And at that time, if you want to hire us to implement them, great. If not, your choice. But we're awesome. So easy to work with. So yeah, the link for that is in the description. So feel free to schedule a call with us. Yeah. So next week, November 7th, that sounds right. Yeah, November 7th, we're going to do the mileage and auto deduction. So this is one I was supposed to do, I think in September, and I was sick. So I fit it in. I just kind of made up, right? So it's now. So we'll do that next week. And we're not really going to talk about the accountable plan. So if you're an S Corp and you haven't, that's a whole separate training. But what we're going to talk about is like, why is mileage important? How do I take my mileage? I've heard, actual versus standard mileage. What does that mean? We're going to kind of just dig into all those little things. All right. So today was short and sweet. Awesome. It's because the Augusta Rule is short and sweet, super easy, super fun to do. Yeah. So if you guys have any questions, feel free to reach out. Otherwise, I will see you next week. Bye.